Hey everyone, and welcome to our deep dive on crypto trading. We're going to be looking at how to navigate this crazy market with tons of insights from risk management strategies to real-world examples to what the experts are saying.
It really is fascinating, isn't it? I mean, we've all heard about Bitcoin, skyrocketing like 1,000% back in 2017.
Right.
You can see why people want to jump in and get those profits, but it's really gone beyond just getting rich quick, wouldn't you say?
Totally. And one of the things I think that is so appealing is that it's just so accessible. These crypto markets are open all day, every day, and literally anyone with an internet connection can participate.
That's the beauty of it. But we have to remember,
Right.
every coin has two sides.
Right.
Like think back to 2021
Yeah.
when Bitcoin had that flash crash 30% in a single day.
Oh, yeah.
That kind of volatility can really make people nervous, but it's just the beginning when it comes to the risks.
For sure. For sure. It's not even just the price swings, though, right? It's also the fact that there is like very little regulation in crypto, so it feels like the Wild West out there.
Yeah, it does.
I mean, we've seen it all, right? Scams, pump and dumps, all those hacking incidents. It's pretty scary, actually, when you think about it.
It is. And over 70% of retail crypto traders actually end up losing money.
Wow, 70%.
Yeah, and it makes you think,
Yeah.
why?
Yeah.
Is it just bad luck? Are they making bad decisions or what? And a lot of times it comes down to just not understanding risk management. New traders especially come in, they have that fear of missing out, that FOMO.
Oh, yeah.
They hear all the success stories and they jump in head first without really thinking about a plan to protect themselves.
Yeah, it's so important. So let's step back for a second and talk about, like, what are the tools and strategies that people need? What do they need to know to be successful and stay safe?
Well, you have to start with the basics, right? So that means choosing a good exchange and a good wallet to actually store your crypto. Think about it like this. You're going on a journey. You
Yeah.
need the right kind of ship. You got to make sure it's secure and reliable. We saw what happened with FTX.
Oh, absolutely.
When that collapsed. People lost a fortune.
Oh.
So doing your research is super important.
Yeah, for sure. And even once you've found the right exchange, then you got to figure out, like, okay, what kind of wallet?
Right.
Do I want a custodial wallet, a self-custody wallet? Like,
Yeah.
what are all these different things?
It can be confusing, I know. Especially for beginners, right? Like custodial wallets, they're easy to use. It's kind of like having your money in the bank.
Yeah.
It's convenient, but you're relying on them for security. But with self-custody wallets, you're in control.
So like a bank vault versus your own safe at home.
Exactly. And then you have hardware wallets like Ledger or Trezors. Those are
Right.
super secure. They store your crypto offline so hackers can't get to it.
That's a great point, especially if you have a lot of crypto.
Yeah.
So we've picked our exchange, we've got our secure wallet, but then what? How much do we actually invest?
Right. That's position sizing.
Yeah.
And that's one of the trickiest parts because it's not just about some arbitrary percentage. It's about figuring out what you're comfortable risking on each trade. You have to be realistic about it.
So if you're investing in Bitcoin, you might put in a different amount
Right.
than if you were buying some brand new coin for some network you've never heard of before.
Exactly. Like, imagine you're exploring some new territory. You're not going to bet your entire expedition on finding gold in the first spot you look, right?
Oh,
You're going to be much more careful.
strategic.
Yes. So let's say, hypothetically,
Okay.
there's this new Bitcoin fork, Bitcoin Nouveau it's called, and it's getting a ton of hype. Claims to be faster and cheaper.
Ooh, I want in.
Right. It's tempting to go all in,
Right.
but that's where that risk management kicks in. You might put in a little bit, see how it goes, but the majority of your portfolio, you keep that in those established, safe assets.
That makes sense. And that leads us to diversification, right?
Right.
Don't put all your eggs in one basket.
That's right.
Because we've seen how, like, different cryptos, they can perform very differently even when the market's doing the same thing.
Absolutely. Like, remember what happened a couple months ago? Bitcoin was up 4% for the month, and Ethereum was down 14%.
Yeah, man.
So if you're only in one, that could be a big problem. So you want to diversify, spread it out, reduce that risk.
So, okay, we've picked our ship.
Yes.
We've packed our supplies carefully. We're diversifying.
Right.
But the crypto seas, they're not exactly calm.
No, they're not.
How do we protect ourselves from those sudden price swings?
That's where our next set of tools comes in. Stop loss and take profit orders.
Okay, these sound important. Tell me more. What are they?
So a stop loss order is basically like a safety net. You set a certain price, and if the crypto drops to that price, it automatically sells. It limits how much you can lose.
Gotcha. Okay.
And a take profit order is the opposite. You set a price, and when the crypto hits that price, it sells. So you lock in your profits.
Oh, so it's left.
Keeps you from getting greedy.
Yeah. So you're like automatically taking your wins, and then the stop loss is like, okay, it's preventing those big losses. I like it. But how do we know where to set these things?
Well, that's where that risk-reward ratio comes in.
Okay, risk reward.
Yeah. It's basically finding that balance between how much you could win and how much you could lose.
So say you're aiming for a 2-to-1 risk reward ratio. So for every dollar you risk, you want to make 2. So if you bought Bitcoin at 50,000, you might set your stop loss at 49.5.
Right.
So that's $500 you'd be risking. And then set your take profit at 51,000. So if it hits that, you make 1,000.
Exactly. That's the idea. But gotta remember,
Yeah.
stop loss orders, they can sometimes trigger on those little dips in the market. You know, sometimes the price might drop just a little bit, trigger your stop loss.
Right.
Then it goes right back up. So you gotta be careful.
So it's not a perfect system, but it's a good guide. And then, of course, you have to manage those emotions, right? You can't let fear or greed take over. Remember that Bitcoin sell-off back in July?
Oh, yeah.
Started above 70,000. A few
Yeah.
days later, it was below 50. People were panicking.
I bet.
And I bet some people, FOMO kicked in. They bought near the top and then watched their investment just plummet. It's tough.
Oh, yeah. And that's why that trading plan,
Right.
sticking to it, staying disciplined is so important. If you'd had a trailing stop loss order during that sell-off, you might have gotten out around 63,000, avoided a lot of that drop.
Oh, okay. Trailing stop loss. Now,
Yeah.
that sounds interesting. What's a trailing stop loss?
So a regular stop loss, you set it at a specific price, right?
Right.
But a trailing stop loss, it kind of follows the price as it goes up. It locks in some of those gains as you go. So if the price drops, you're protected.
I see. So it's more dynamic. It adjusts to the market. Very cool.
Mm.
But even with these tools, you got to be smart about it, right? You can't just get greedy. And speaking of greedy, we have to talk about leverage.
Leverage. The double-edged sword of trading.
Exactly. It's like you can boost your profits, but you can also boost your losses. So a 5% gain with, say, 5 times leverage,
Right.
boom, 25% gain. But a 5% loss, that's a 25% loss.
Exactly. And some platforms, they let you go up to 100 times leverage.
Oh, wow. 100. That's crazy.
Yeah, so be careful with leverage. It's definitely not for beginners.
Great advice. So we've covered a lot here. We talked about picking the right exchange, finding a secure wallet, understanding position sizing and diversification, using stop loss and take profit orders, managing those emotions, and being careful with leverage. But we're not done yet. Next time, we're going to dive into the world of expert opinions and see what they have to say about where crypto is headed.
I can't wait. It's always interesting to hear those different perspectives.
Me too. See you next time.
So welcome back to our crypto deep dive. We've been talking about, the basics of trading, how to manage risk, all the emotional ups and downs.
Yeah, it's a lot.
It is. But now I think it's time to bring in some expert opinions, people who've been watching these markets for a while, get their take on things. What do you think?
I love that idea. It's like, you're exploring this new land and you find some seasoned explorers, some people who have the maps.
Right.
They can give you some tips.
Exactly. And just like with any new territory, you're going to have a lot of different opinions about where things are going. Some people are going to be cautious. Some are going to be super optimistic. So let's start with Gene Munster over at Deepwater Asset Management.
Okay.
He's predicting Bitcoin will hit $150,000 by 2025.
Wow, that's a big jump. Why is he so bullish?
Well, he thinks the market's in a good place. Institutional adoption is increasing.
Right.
More people know about crypto, and
Yeah.
he thinks regulations are going to get a little bit better.
Yeah, that makes sense. I mean, look at the Bitcoin ETFs this year. Over $35 billion flowed into those.
It's huge. And he's not the only one who's optimistic. Standard Chartered and Bitwise, they're both predicting Bitcoin could go even higher.
Okay, how much higher?
Over 200,000.
Get out.
Yeah. And they're both really focused on, that institutional money coming in. They think it's going to legitimize crypto even more and just bring more people into the market.
That's a great point. So are they basically saying that, retail investors, we're kind of taking a back seat now?
No, not necessarily. They think that, as more institutions come in, it'll kind of create this ripple effect. More traditional investors will start to feel comfortable.
Yeah.
And it'll just become more mainstream. Oh, and Bitwise actually has this really interesting wild card they throw in.
Okay, I'm intrigued. What is it?
They think the U.S. government might start a strategic Bitcoin reserve.
Wait, like a Bitcoin reserve? Like, what does that even mean?
Yeah, like they would actually start accumulating Bitcoin as part of their national reserves, kind of like they do with gold.
Wow, that's wild. So are they saying that this could, really push the price of Bitcoin up?
Oh, they think it could send it to 500,000
500,000.
by 2025.
That's a pretty big if, though,
Yeah.
right? Like, why would the U.S. government even do that?
Well, Bitwise thinks that, more and more policymakers are starting to realize that crypto's here to stay,
Yeah.
especially Bitcoin. And some people think that, having Bitcoin in their reserves could help with inflation. It would diversify their assets,
Right.
and it might even, help them in the global economy as things become more digital.
Yeah. It's almost like, the world's changing, and they're trying to position themselves to be a leader in this new digital world.
Exactly. And it really highlights how much governments can actually impact crypto. I mean, right now, there are so many unknowns when it comes to regulations. But as governments figure out what they want to do, things could change drastically.
It's like those early explorers again, right?
Yeah.
No maps, no rules.
Hmm.
But then as more people explore, they start making maps, they set up some rules,
Right.
things start to change.
It's happening in crypto right now, but not everyone is quite as optimistic as, Bitwise and Gene Munster. Like the analysts over at VanEck, they're still bullish, but they're a bit more cautious.
So what are they saying?
They think Bitcoin will reach about 180,000 by 2025, but they think it's going to be a bumpy ride to get there.
Okay, bumpy how?
Well, they're saying it'll probably go up to a new high, then have a 30% correction,
Oh.
then maybe level off for a while, and then another peak towards the end of the year.
So it's not going to be like a straight line up.
No, it never is with crypto. And their prediction, it really emphasizes how important risk management is, even if the market looks good,
Right.
and even if the experts are saying good things. There's always going to be volatility. There's always going to be uncertainty.
It's like, you can have the best ship, the best captain,
Yeah,
but you're still going to hit some storms out there.
exactly. So you always got to be prepared. You got to diversify
Yeah.
position sizing, stop loss orders, and don't forget
Yeah.
controlling those emotions.
It's so important. But we've been talking a lot about Bitcoin. What about the other cryptocurrencies? Like what's happening with Ethereum, especially with all this talk about DeFi, decentralized finance?
That's a great question, and one that we're going to dive into in our next segment. Because Ethereum, it's really carved out its own space in this world, and how well it does, it's really tied to how DeFi evolves.
Okay, so stay tuned. We're going to explore the world of altcoins and everything that's shaping their future. Welcome back to our crypto deep dive. We've covered so much ground already from, risk management to expert predictions. What a journey.
It has been.
Ugh.
But there's one more piece of the puzzle we got to talk about. Altcoins. We spent a lot of time on Bitcoin, but the crypto world is so much bigger than that.
You're right. And I'm especially curious about Ethereum. With all this talk about DeFi, decentralized finance, what's the deal with that?
Yeah, Ethereum's really interesting. It's not just a currency like Bitcoin. It's like a platform where you can build all sorts of things. Decentralized applications, smart contracts, a whole new financial system.
That's what I find so cool about it. It's not just about, buying and selling. It's about changing how we think about money and ownership.
Exactly. And DeFi is a perfect example. We're seeing these decentralized lending platforms popping up, stable coins that are tied to, real world assets, even prediction markets.
It's like a whole new financial universe is being created right in front of us. It's kind of mind-blowing. But it's probably not without its risks, right?
Oh, absolutely. DeFi is still very new, and there have been, hacks and scams, and the regulations are still, kind of a mess.
So it's like the Wild West, but in finance? Sounds exciting, but also a little bit scary.
Exactly. You got to be careful. Do your research. Don't put all your eggs in one basket, and don't trust everything you read online.
Solid advice as always.
Mm.
But even with the risks, it seems like DeFi has a lot of potential.
Oh, tons of potential. It's attracting some really smart people, and it's changing so quickly. It's definitely a space to watch.
For sure. But zooming out a bit, what are some other big trends you're seeing in crypto right now? What's got you excited?
One thing that I'm really interested in is how crypto and traditional finance are starting to, merge together.
Really? Like how?
Well, you're seeing big banks and financial institutions. They're starting to offer crypto services. They're experimenting with blockchain.
Interesting.
And they're even investing in crypto themselves.
Wow, so it's like those two worlds are finally starting to come together.
Yeah, and I think we're going to see a lot more of that as regulations become clearer and more institutions jump in. Oh, and another thing, there's a big push for sustainability in crypto.
Oh, yeah, I've heard about that.
Bitcoin mining uses a lot of energy, and that's been a problem. So people are working on more eco-friendly ways to do things.
That's great. It's important for crypto to be, responsible and sustainable if it's going to be around for the long haul.
Exactly. But in the end, the future of crypto, it really comes down to what we all do. Every decision we make, every trade, every investment, it shapes the whole ecosystem.
That's a powerful thought. So as we wrap up here, what are some of the key things you want our listeners to remember as they, go on their own crypto adventures?
Well, I think it's important to remember that crypto is more than just a way to make a quick buck. It's a technology that has the power to change the world,
Hmm.
but it's also risky and complicated, so you have to be smart about it.
Right. Knowledge is power, especially in crypto. Well, this has been an incredible journey. I feel like I've learned so much about the risks, the rewards, and the potential of this amazing technology.
Me too. It's been a blast. And remember, we've given you the tools, but the journey is yours.
So explore wisely, trade responsibly, and keep learning. And until next time, happy sailing.